Hey everybody, welcome to the Sense of Things. Good morning, and we're off and running today. Got a lot of great information going on. Ron's going to take this part of the show and go over some things that he's been looking at, specifically on consumer sentiment and a little bit more on our friends in the analyst community updating their predictions for the market and stuff like that. So stay tuned. We'll be right back on in just a second. Hey everybody, welcome to the show. Ron, how you doing, bud?
Good morning. Good morning. I think last time I said spring is in the air. I'm loving it. I'm loving it. I don't know about you.
Yeah,
Market's not cooperating all that well, but
we have this, and it happens this time of the year. We get these kind of upflows from the Gulf of America, I guess what you call it now, that come up, and it is humid as all get out. It's 70 degrees in the morning, and it feels like you're wearing the air right now.
you can keep your humidity.
I know. I think I'm going to come visit you this time of the year next year. So
Look, actually, I was just talking to my friend in Jersey last night. He said the same thing because his allergies have been kicking up the last 2 weeks with everything blooming. He says, "I think I got to get out of here these couple of weeks." So
just
I'm gonna start an Airbnb.
I think so. I think you just maybe build a few casitas in your backyard there, bud. And
all good.
hey, I was doing some research into container, building. You can just flop a few containers.
My property isn't that big.
Okay, sorry.
I could probably put a couple of sheds.
They've got the short containers, like the 24 footer. So, it's enough to put a bed in and a bathroom, and that's about it.
Okay. All right. What can I tell you? I make a mean breakfast too.
There you go. There's the breakfast part. You've got some fun stuff to kick us off, right?
Yeah, absolutely. We got to continue on with our trivia. It's not what you think. I was wrong on this too. What is the first food eaten in space?
Space. Huh. So I don't think it was astronaut ice cream that they try and shove on you at every NASA place.
Well, I will tell you, in case you're going to it wasn't Tang.
It was not Tang. That's a good thing because it's awful. I'm going to say, I don't know, some kind of stew in a bag.
Applesauce.
Applesauce. Okay, that's interesting.
That would make sense.
I don't think I've had applesauce since I was like 4, so I don't know.
There's only one applesauce to have. That's Mott's. All the other applesauces stink. All right. I'm sorry. Screw. I don't know why I did get that. So I didn't realize this. There are 43 countries that still have a royal family.
Wow. I would have said maybe 15, but wow, that's amazing.
Yeah, I know. Hopefully I didn't screw up the next one. What is the national animal of Scotland?
The hairy cow.
No. I'll give you another shot. You're not going to get it.
Okay. I have no clue. I don't even know any other.
It's not the leprechaun.
The marmot.
But it's close. But it is close to the leprechaun. You'll understand. You ready?
All right. The unicorn. Okay.
Like I said, it's almost as good as saying the leprechaun. What can I tell you?
Okay. It's not even an animal, but okay, we'll go with it.
That's my point. I don't know.
They drink a lot of scotch in Scotland, so I'm just saying. I
didn't really fact check or vet these things. I just got it from some reputable site. So what can I say?
Wow. I couldn't even begin that. I'm like, now all of a sudden the hairy cow is on every decoration thing. Every time we go to the decoration store, it's like the hairy cows are everywhere. I'm like, okay, that's really only in one country in the entire friggin' world that ever has those.
Where is the hairy cow?
It's in Scotland. It's their
national. It is. Okay.
Yeah. I forget what they're called, but they're like all furry and stuff like that.
All right, here we go. So I thought this was interesting. Look, I would have loved to have seen kind of multi-year history here on a couple of things. The top 7 are still producing the most amount of earnings and the most amount of earnings growth. And their chart on the right kind of goes through where it is going back to 2023. And in 2023, if you remember, coming out of 2022 with the 22 to 24% pullback in the market, everybody was thinking there was going to be a recession. 70% of the S&P move in 2023 was from the top 10 stocks. Wow. The other 490 were only about 3% plus or minus. So that's what shows it there. Then you take a look moving forward, and there was a little bit of potential catch up here for this year and next year, but the top 7 are still printing cash.
They're still producing. Yeah. I mean, that's the thing. Everybody gives they've gotten just trounced on over the last, I think they got ahead of themselves, but the reality is they're producing. This isn't 90, because I've heard comparisons to, this run up in the market is like 99 and 2000. And I'm like, no, it really isn't. It's very tight. It's a very small group of companies, but these are actually companies that make a hell of a lot of money.
And that's why right now, I hate to say it, but this is where you want to put your money on the pullbacks, because right now they're under a lot of pressure. There's going to be continued pressure, but they're still making money. So their valuations and their PEs have come down, but their EPSs are going up. Why wouldn't you invest in the money that's just printing cash?
But I think right now they're a place that they provide a great liquidity source for a lot of funds, because people are panicked and they're bailing out of mutual funds and everything else. And so these provide a massive amount of liquidity. That's why they're under pressure. But I think the reality is, let's say we get a few trade deals, few skins on the wall with trade deals, the tax thing gets worked out. I would venture to say money's going to start flying back into these because they're continuing to make money.
When is the operative question? But actually, who cares? If your
really
horizon line is 3 to 5 or 5 to 10 years plus out, why not?
Why not? Yeah, why not be plowing money into the market now?
Yeah. So next one is University of Michigan consumer sentiment.
Wow.
Yes. Yeah. This is basically negative comments on government economic policy news. It's almost twice as bad as it's ever been, including coming out of the financial crisis. This was the fiscal cliff period of time. This was just this was when they were talking about raising rates going into COVID. This is worse than ever before.
Yeah. And it's funny. It's hilarious to me because I share a lot on LinkedIn of one of the analysts at Fidelity, which I've known Urian for years. When he was completely unknown, he was this weird little analyst at Fidelity. And now he's been promoted to the top, Urian Timmer. And it was funny because I love reading the comments when Urian posts something. I love reading the comments, and so many of these, you can just see the political focus of some of these people that comment. And I'm like, you know what? None of us knows what's going to happen with all of this. As much as everybody wants to say, because of all this trade stuff, we're going to have all these problems and everything else. Nobody knows. Nobody's ever done anything like this before. No. So we're just going to have to see what happens. I'd venture to say,
if anybody says they know, they
have no clue, because there has never been anything like this happen in history.
So I did do a slide, but mine was handmade last week.
Yeah, this is an official slide from Bloomberg.
And I saw this and I'm like, all right, somebody did the heavy lifting for me. So it's interesting enough, some analysts have not moved their price targets.
Okay.
They're still hovering in the high 6,000s and hovering around 7,000. Oppenheimer was the highest, and now they're right in the middle again.
Okay.
Here they are. I still think this is interesting. BCA, we did recognize them last week. JP Morgan, they got rid of Kalanovic, who was incredibly brilliant, but he just was sour on the market and the economy. He was probably 12 to 18 months too early. Nobody could time these things. Look, you know this, right? Economists are wrong more than 50% of the time. That's why they still got a job for life. But I just think this is interesting. I don't know what stands out to you.
Oh, it's the thing that stands out to me is none of them wants to be wrong. So if one of the big players makes a move, it seems like they all want to, okay, we've got to come back too, because we don't want to be really wrong and show all these people. I honestly say to Wells Fargo and Deutsche, you know what? Thanks for standing your guns. Even HSBC, Scotiabank, Fundstrat, you know what? They're holding their guns and saying, okay, we're going to see how this all works out. I fall into that same crowd. I'm like, you know what? At the beginning of the year, that was my prediction. It's what I saw happening. Nothing that happens in the middle of the year is going to make a hill of beans difference. And like
if it all gets fixed and things are normalized again, they're gonna move their targets again.
Yeah, and it'll be off to the races, and all these idiots will come back. And what's going to end up happening is that bottom group there, where all the green or all the blacks are just going to come back. They'll go right back to where their thing was and be like, oh, that's what we predicted at the beginning of the year. Yeah, but you weaseled around and pulled back. And okay, we're just going to keep chasing it around. It doesn't help to predict after it's happened and then say you're accurate.
What I'd like them to do, because, this is really for PR more than anything else, and we've talked about this. What they should do is exactly what you and I did. Here's our bull case.
Yep.
Here's our bear case. Here's our base case.
Yeah.
And based on what happens throughout the year, we're not going to change it, because essentially you're setting your field goal post based on numbers and things we all know will change. But give me a break. You're going to keep moving your target.
I love that. Yeah, once again, I love it, and I appreciate the fact that some of these guys are just sticking to their guns and saying, you know what, this is what we saw at the beginning of the year, knowing all that we knew. We already knew that the president was going to come in and do tariff stuff and all that. Yeah, it's a lot more heavy-handed than was expected, but you knew for a fact, because he for the last 2.5 years, he's been campaigning on this. You knew exactly what was going to happen. So don't tell me that you got surprised all of a sudden with what's going on here.
And I think the ones that haven't changed their target, I just think they're waiting a couple of months. They're all running their models, but they're like, all right, let's see how this thing shakes out before we start creating.
Change it. Yeah, because the thing is, okay, it's pulled back right now, but we've just seen over the past couple days, the market has run back massively on just some simple news. Okay, he's not going to fire the Fed chair. Okay, not like he actually could. That was the funny part. Everybody's like, he's going to fire the Fed chair. He can't fire the Fed chair. He's got to work. That's why there's that separation of politics from the Fed, although sometimes
it's got to be for cause. There's no cause there.
Yeah.
All right, so our last one, we should probably be doing this once a month, but
I think with the way things are moving, yes.
I think I had this in early February. Healthcare sector was my sector for the year.
Yep.
It is up. The biotech is down, because that's where I have a decent amount of client money invested. But healthcare is still going to perform. Energy has surprised me because oil has been down.
Yeah.
But I think it's going to continue.
But it's not the big oil companies that are doing well here. It's the oil field service. It's basically the stuff close to the wellhead. What surprised me is the driller or the pipelines, which that's usually a theme that I have, or it's a theme I've had, and those have not been doing as well. And they're
subject to more interest rates too.
Yeah, but they're pumping gas like crazy, or they're pumping oil like crazy, and those are long-term contracts. So I think that's just people not really understanding that business very well part. But
I agree. But
where do you get that? Where do you get that chart from?
I'll send you the link.
Okay. I'll just for the audience.
Oh, you'll put it in the show notes. How's that?
We'll put it in the show notes afterwards.
Yeah. I think it's a good. I have it bookmarked, so
I think it's a good source for a lot of people, because I think it's just interesting to see what's doing well at any given time. And you and I both said healthcare was going to do well, and I think it will. It's just some of the healthcare side is getting a little wonky a little bit with supply chains and stuff like that, of are they going to be tariffed and things along those lines. But it's interesting. I think it will do well.
Yeah, I agree.
All right, folks. Thank you for joining us. We try to keep these things tight. So we'll be doing a second show this week, so make sure that you keep an eye out, because we'll be dropping both of them here in the next couple days. And we'll see you on the next show.